Welcome back to the channel, everyone. It's MHD Jaber here, and if there are two things I love, it's real estate and finding incredible investment opportunities. Today, we're diving headfirst into the wild world of cryptocurrency because, let's be honest, you can't ignore those potential gains. In this video, we'll break down the biggest crypto news shaking up the market right now, including Bitcoin's recent surge and what it means for you. Plus, we'll explore some top trading strategies that could help you navigate the crypto roller coaster and potentially come out on top. Whether you're a seasoned crypto investor or just starting, stick around because this information is pure gold. Let's get right into it. Alright, let's talk Bitcoin. This crypto kingpin just smashed through the $97,000 mark. That's an 18% jump since March 31st and a whopping 28% surge from those early April dips. Remember when everyone was freaking out about Bitcoin crashing? Yeah, those dips are looking pretty tiny right now. But here's what's really interesting. MicroStrategy, the software giant that's gone all in on Bitcoin, just announced a $5.8 billion gain on their Bitcoin holdings. That's billion with a B. And they're not stopping there. They're upping their Bitcoin gain target for 2025 from a cool 10 billion to a mind-blowing 15 billion. Now, I'm not saying you should dump your entire life savings into Bitcoin. Remember, this is a volatile market. But when a major player like MicroStrategy makes these kinds of moves, it definitely gets my attention. It tells me they see something big on the horizon for Bitcoin. So what's driving this surge? Well, there are a few factors at play. First, we've got increasing institutional adoption. Big banks and corporations are starting to dip their toes into the crypto waters, and that's bringing in a wave of new money. Second, we've got the global economic climate. With inflation on the rise and traditional markets looking shaky, some investors are turning to Bitcoin as a hedge against uncertainty. They see it as a safe haven asset, similar to gold. And finally, we can't forget about the power of FOMO, the fear of missing out. When Bitcoin starts pumping, everyone wants a piece of the action. That creates a buying frenzy that can push the price even higher. Hold on to your hats, folks, because Morgan Stanley, one of the biggest investment banks on Wall Street, is making a move into the crypto arena. They're exploring ways to offer cryptocurrency trading through their e-trade platform. Now, this is a big deal. We're talking about a major financial institution dipping their toes into the crypto waters. It's a clear sign that the traditional financial world is starting to take cryptocurrency seriously. Imagine being able to buy and sell Bitcoin or Ethereum right alongside your Apple and Tesla stock, all within your e-trade account. That's the kind of convenience and accessibility that could bring a whole new wave of investors into the crypto market. But it's not just about convenience. Morgan Stanley's move also adds a layer of legitimacy to the crypto space. When a respected institution like that gets involved, it helps to legitimize crypto in the eyes of traditional investors who might have been hesitant before. This could be a game changer for the crypto market, folks. It's like that moment when your favorite indie band finally signs a major record deal. Things are about to get interesting. Okay, let's talk about the elephant in the room regulation. The US Senate is in a full-blown showdown over a crucial cryptocurrency bill, and things are getting heated. This bill is supposed to be a big deal. It's designed to create the first-ever federal regulatory framework for stablecoins, which are cryptocurrencies pegged to the value of a stable asset like the US dollar. Think of them like the responsible older sibling of the crypto world. But here's the catch. 9 Senate Democrats recently pulled their support for the bill, and they're not holding back on their concerns. They're worried about the potential for money laundering, and the risks it could pose to our entire financial system. Now, I get it. Regulation is important, especially in a market as new and volatile as cryptocurrency. We need rules in place to protect investors and prevent shady stuff from happening. But too much regulation could stifle innovation and prevent the crypto market from reaching its full potential. It's a delicate balance, and right now, the Senate is trying to find that sweet spot. The outcome of this battle could have a major impact on the future of cryptocurrency in the US, so stay tuned because this is one to watch closely. Now let's talk strategy. If you're looking for an edge in the crypto market, you need to know about AI-powered algorithmic trading. This is next-level stuff, folks. Imagine having an army of super intelligent robots analyzing market data 24/7, identifying trends, and executing trades at lightning speed. That's the power of AI trading. These algorithms can process massive amounts of data in real time, something that's impossible for even the most seasoned human trader. They can spot patterns and opportunities that we might miss, and make decisions based on pure data, without any emotional bias. One of the coolest things about AI trading is its ability to perform sentiment analysis. That means it can analyze news articles, social media posts, and other online content to gauge public sentiment towards a particular cryptocurrency. If the algorithm detects a surge in positive sentiment, it might recommend buying. Conversely, if it senses fear or uncertainty, it might recommend selling. It's like having a crystal ball that tells you what the market is thinking. Now, AI trading isn't foolproof. The crypto market is notoriously unpredictable, and even the most sophisticated algorithms can get things wrong. But it's definitely a tool worth considering if you're serious about maximizing your crypto gains. Alright, thrill seekers, this one's for you. Scalping is a high-frequency trading strategy that involves making a large number of trades over very short periods, sometimes just seconds or minutes. Think of it like being a day trader on steroids. Scalpers aim to profit from small price fluctuations, buying low and selling high over and over again. It's all about those quick wins, baby. Now, scalping isn't for the faint of heart. It requires nerves of steel, lightning-fast reflexes, and a high tolerance for risk. You need to be glued to your screen, constantly monitoring the market for those tiny price movements. One wrong move, and you could get burned. But if you're good, really good, scalping can be incredibly lucrative. It's like playing a high-stakes video game where real money is on the line. Just remember, this is a strategy best left to experienced traders who know what they're doing. If you're new to crypto, I'd recommend starting with something a little less intense. Ever notice how the price of Bitcoin can vary slightly from one exchange to another? That, my friends, is an arbitrage opportunity. Arbitrage trading involves buying a cryptocurrency on one exchange where the price is lower and simultaneously selling it on another exchange where the price is higher. It's like finding a $100 bill lying on the ground and picking it up. The profit margin on each trade might be small, but if you do it enough times, those gains can really add up. It's all about volume, baby. Now, arbitrage trading isn't as easy as it sounds. You need to be quick, you need to be organized, and you need to have accounts on multiple exchanges. Plus, you need to factor in trading fees, which can eat into your profits if you're not careful. But if you're willing to put in the work, arbitrage trading can be a great way to generate consistent profits in the crypto market. It's like being a financial ninja, exploiting those tiny price discrepancies for your own gain. Alright, let's talk about breakout trading. This strategy is all about identifying those key moments when a cryptocurrency's price breaks out of its established trading range, signaling a potential surge in either direction. Imagine a cryptocurrency has been trading between $10 and $11 for the past few days. Suddenly, it breaks through that $11 resistance level with strong volume. That, my friends, could be a breakout. Breakout traders jump on these price movements, hoping to ride the wave as the price surges higher. Of course, there's always the risk that the breakout is a false alarm and the price quickly reverses course. That's why it's crucial to use technical analysis tools like support and resistance levels, trend lines, and trading volume to identify genuine breakouts and minimize your risk. Breakout trading can be incredibly exciting and profitable, but it also requires discipline and a solid understanding of technical analysis. It's like surfing. You need to know how to read the waves and time your entry perfectly to catch that perfect ride. There you have it, folks. The latest crypto craze, Bitcoin's epic surge, and some powerful trading strategies to add to your arsenal. Remember, the crypto world is constantly evolving, so stay informed, do your research, and never invest more than you can afford to lose. If you found this video helpful, hit that like button, subscribe to the channel for more crypto insights, and don't forget to ring the notification bell so you never miss an update. Until next time, stay informed, stay invested, and keep crushing it in the crypto market.